Hello everyone, Jesse Webb, Traders Pro. Market conditions remaining bullish in a bull market. Had a little bit of a pullback yesterday. We'll take a look at that chart pattern. We've got a nice setup again where we've got momentum. Momentum's pulled back significantly, but still in this upper range. It's just hovering right on that hold area. But we also have breadth solidly in the buy range. Sentiment also. We did have buy-sell ratio flip back to a little bit of a bearish bias here. That also has been, looking at this, and I mentioned this yesterday. This is actually quite abnormal compared to the typical pattern and the movement of the overall database. These are all the stocks in the database, and typically this is what we see. These pretty wide swings, and we're seeing just this tight range right here. So we've got, just some indecision still in the market at this level, which is interesting. We have, some stocks and some areas, some sectors that are topping out, probably not a complete reversal, but certainly due for a pullback. One of the ways to look for that is if you go to this sectors tab right here and then go to the sectors ETF, typically the default scan tab is right here, and it'll pull up all these different sectors, and you can look at sectors that way. But one other way is to just click on this sectors ETF. These are just exchange traded funds that track each of these sectors. So you could see U.S. technology, consumer services, industrials, energy, financials, healthcare, utilities, just different segments or different sectors of the economy. They're automatically ranked by rank, so it's going to pull in the strongest sector, and obviously technology has been strong. You look at that chart here, and it's just been continuing to move higher. We know that we've had a little bit of a pullback. This is really healthy, tight, nice consolidation on the pullback. But you can glance and see which ones are looking good, maybe which ones are looking bad. And you can also, one of the things to look at is the strength of the overall market by clicking on just sorting by signal. And you can see, ideally, we want the majority of these in buy. And we had a few of these that have ticked back to hold. Energy is starting to drop again. We've seen energy really consolidate right here, and we saw a potential little breakout working, and then we've got this move yesterday that pulled things back down. This is a horrendously ugly chart as well. You can just see it's been lots and lots of downtrend and breakouts, and so whether or not we get a bounce and a breakout higher will yet to be seen. But this can show you also, we can use it as additional confirmation in our market analysis that we do with the overall market trend data also. Let's take a look at some stocks. In the new buy list, we've got GENI, which had a real big, large move yesterday, 25% move. These are the moves that typically, they bump that momentum indicator all the way up into 300 plus. In this case, that's just way too high when you have a strong move like that. I've mentioned this before. Sometimes they get some continuation because there's a lot of day traders that will probably push that stock higher during the day, and now they're looking for stocks that still have a lot of attention, still have a lot of eyeballs, and so sometimes you can get a second day of continuation after a big move. But I would wait for that to at least solidify, maybe pull back a little bit for potential opportunity when you see a big strong move like that. It's a nice move, it's great, and it's outside of this breakout area, but in terms of risk management, a lot of these it'll bounce up and they'll immediately reverse and pull back, or at least give a decent pullback on the open. So I'd give those a day or two if you see a stock like that. Let's scroll through some of these and take a look at some of the next ones on the list. Here, let's do this. And that one doesn't look right either. Let's just refresh here, and we will start this over again. New buy, GENI. There we go, PERI. Internet stock, computer stock. Also not a great looking pattern. It has moved back up into the buy zone. I say that because I prefer a stock that's already in this uptrend. When they have these deep retracements, you have to go out a little bit of a time frame, go out to a year and take a look to see what the context of that looks like. In this case, that may actually be a decent pullback because you've got probably a 50% retracement. You do. This little toggle tool, you can click on that. This is the Fibonacci snap tool, which will automatically snap to the high and low on the chart that you're looking at, so you can identify if it's going to fall back into these buy zone. This 50% 618 support location. Typically when you have a stock that has gone from here to here, if it'll move back the other direction by half, by 50%, that often becomes a new demand zone, new area for support. And you're starting to see that here, a little false breakout, but an opportunity possibly here on this if for that double bottom and a bounce. At a 50% retracement, those will often get some continuation. Keep an eye on PERI today. Then I can just undo that fib level, move on to the next chart. TRTN had a couple that looked like they had these buyouts and then they're just stabilizing. I've mentioned this before. If you see a chart like this, I'd just move past it. It's either a buyout where we have to just wait for the new company's symbol to take over and then it just drops out. And we get those in there from time to time. Another one here, GHL. Okay, THRX Medical Bio, really volatile stock. Really not a nice looking confirmation pattern there either. I just moved past that one. VRSX, possible breakout, continuation of that breakout. These are nice patterns where you've got these uptrends consolidating tightly in this upper third of the chart, upper quarter of the chart, and looking for continuation of that momentum move. You're getting a little bit of a higher, each pullback has a little bit of a higher low there, and so possibility for a breakout on VRSK, if the overall market continues higher. Some good looking patterns on that FTDR construction stocks. We've seen construction also looking good. Well, really over the last year, we've seen construction that's been doing quite well. Let's take a look at muscle ETFs and see what's strong right here. Those muscle ETFs, these are ETFs, exchange traded funds, so they're baskets of stocks or just entire industries. They can be inverse, they can be 3x, 2x. You'll notice some of these down here like Industrial Bull, 3x direction. ETNs, travel. You've got a lot of different things to choose from in terms of 2x, 3x, inverse, whatever. Look, this BKCH, this is a blockchain ETF, and we've seen cryptos and Bitcoin and Ethereum and some of those start to wake back up again and starting to move. So really anything to do with blockchain or anything to do with cryptocurrency, this ETF is going to contain a lot of those symbols, a lot of those names. It's had a big breakout and a nice move. I'd keep an eye on that one. I'd wait for a little bit of a pullback here, but you've got some strong momentum developing in crypto and in Bitcoin. You'll notice another couple here, digital transformation. This is a Fidelity ETF, crypto industry, digital payments. So again, they're going to have varying stocks that are inside of the ETF, but if you prefer ETFs over individual stocks, then look for the muscle ETF scans as well. These are not new buys. These are just the strong stocks, similar to muscle stock, where you have the new buy list that's here, or rather the strong stocks in the group, and then you also have new buys. ETFs is the same. You've got the strong ones, and then you also have the new buys. It's interesting to see that we're getting all of those today on ETFs are short treasuries. Okay, so treasuries are going down. This means it's going up. When treasuries are going down, interest rates are going higher. So if you don't want to necessarily play or know how to play interest rates, then this is basically a trade against interest rates going lower. If bond prices are dropping, these inverse, you'll see the little -1 right there. Or -3 in some of these other cases. Okay, so as interest rates are going higher and bonds are going lower, a -3x 20-year treasury is going to go higher, and that's what you're seeing right here. And that's actually a decent pattern. That actually, we saw that employment number, or the jobs report. There's actually one other one that's coming out this morning. It might be out already. And it was good. It was strong. And so the market is a little worried now that the Fed may have to go back and raise interest rates. And the bond market is confirming that by bonds moving lower, interest rates moving higher. That'll do it for today's update. Thanks, everyone. Have a fantastic day today.